Hi, good morning. Welcome to Bazaar Morning Call. I'm Sonia Shenoy and with me are Anit Singhal and Reema Tendulkar. Well, it's been 3 days running that the market has shown signs of grinding to the lower end of trade. And even in trade yesterday, we had disappointing earnings from the likes of HUL and TCS, muted earnings from TCS that didn't go down very well with the street. In fact, there was delivery selling that you saw to the tune of almost 600 crores in the likes of TCS, etc. And now you get a sense that perhaps the Nifty is facing a firm resistance at the upper end of the band at about 8,200 or so. The flows have also dried up, so not too much to talk about there. But the one key takeaway is the fact that domestic institutions continue to sell in this market, and they generally have a better sense of which way the near term is headed. So DII's net sold about 208 crores in the cash market, double of what the FII's net bought. So that perhaps will be something to worry about. The global cues are mixed today, so while the US markets were down about 1%, the Asian markets are in the green, and the SGX Nifty is also indicating that perhaps the start could be on the green side. But let's see, the first part of the earnings season has not been good, and generally we talk about the first half of earnings season being stronger than the second half, but this time around it's been different, with key disappointments coming in from the likes of HUL, TCS, etc. So let's see how the market wades through all of that. Hi Reema, morning.
Hi Sonia, good morning. Good morning Anuj as well. You know, the earnings so far have not been so bad from the likes of Infosys, TCS, Zee, HUL. But despite that, I guess the expectations are so finely calibrated in the market that even a minor miss is taken very badly. But, and while we've lost ground for the last 3 sessions, we've not lost too much in the Nifty. The Nifty is only down close to about 1%, and even the Sensex is only down 1%. What stands out is how range-bound we've been for the last many trading sessions. In fact, for 8 trading sessions, the Nifty has been closing between 8,100 to 8,200. That's since the 1st of October. So, Anuj, that's the big question. After being range-bound for the last 8 days, when will the breakout take place? And if yes, any signs in which direction it will be in?
Well, morning, Reema. You know, it's tough to say right now because yesterday the cash market volumes plunged. You know, and the market has been in a bit of a range. The range is well defined now, so at least that's one good thing. You have a range of 8,100 to 8,200, and this morning the SGX Nifty is indicating that we'll start right in the middle of that range, somewhere around 8,150. So clearly, the trade is well defined, whether, you know, the market breaks 8,100 or the market breaks 8,200. As I said, cash market volumes were low yesterday, so I won't make too much out of the cash market data of FIs buying 120 crores and DIs selling about 200 crores. The only thing is, of course, is that DIs have now been selling for last 7 or 8 days, which is not a good medium-term indicator for the market. The F&O data so far has been unadulterated bullish. That's turning now for last 2 days. It started to turn from day before when you saw minor unwinding. Yesterday was not just major unwinding but fresh short build-up. FIs sold about 900 crores in index futures after consistently buying, and there was unwinding of 46,000 longs. There was fresh build-up of 22,000 shorts, and I was also looking at the index options data. There was unwinding of index put longs. Now, what does that mean? My simple understanding of this is that those FI traders who would have bought index futures and would have hedged by 8,100 puts would have unbound all those positions. So, which is telling you that, you know, if you're playing for a large upside in this series, somewhere around 8,500, 8,600, maybe that's now going out of the window. And the upside seems to be now capped. 8,180 to 8,225 was the zone that I have been talking about ad nauseum now, and that remains the key resistance zone for the market, 8,180 to 8,225. Clearly the key has been the earnings disappointment. Sonia, as I told you yesterday as well, when the start is this bad, not in terms of the overall numbers, as Reema pointed out, Infosys number itself was not bad. TCS was slightly muted, Lever was slightly muted. In between all of this, we have had a TTK Prestige which did well. But, you know, this raises the risk that have all the earnings disappointment been factored in? You know, have all of that been priced in? Because so far what's happening is that even good earnings are not being rewarded. As again, TTK Prestige is an exception. So let's see, you know, IndusInd Bank was a case in point where even good earnings were not rewarded. The stock actually, Zee Entertainment was another reason. So some of these stocks are clearly priced to perfection. The problem is that, you know, Infosys and TCS has shown you one thing, that IT is not ready to take leadership. That's the second biggest sector. That's out of the leadership race. Banks, yesterday you saw what happened with ICICI Bank. Banks are struggling at higher levels. There's clearly something worrying stocks like ICICI Bank, maybe even HDFC Bank. PSU banks, we all know, are just trading trading pops, not more than that. So in this scenario where your two biggest sectors are not ready to take leadership position, as a sector, you might still see a day in which, once IT stock does well while the other does not do well. Similarly, on one day, a couple of banks may do well. Like yesterday, Axis, IndusInd, Yes Bank did well, but all of that good work was undone by ICICI Bank. That was in the red. In this kind of scenario, you have 3 or 4 stocks which are trying to take leadership positions: HDFC, Reliance, ITC, and Larsen & Toubro. These are really 4 stocks which the market is now betting on, and these stocks have been doing well. HDFC in particular has been doing rather well. These stocks have to take market higher, but the sense you get is that you should be prepared for some more range trading between this 8100 to 8200. And after a long time, so far I've been extremely bullish on this market. After a long time, you're getting a sense that the risks on the downside are now opening up. Yeah. If one more attempt towards 8200 to 8225 is not successful, in that case, there's a genuine risk of market topping out in this zone and then seeing maybe lower levels as the bad earnings really catch up.
That's true, Anuj. And this growth slowdown picture, I don't think it's over just yet, because yesterday you did see the biggest retail giant Walmart come out with, a statement where they've cut their growth outlook for next year. They've also, the stock fell almost about 10% and they've decided to invest almost $11 billion, much lower than what they've invested in the past. And because of that, they've cut their EPS estimates. Also, the Fed Beige Book highlighted concerns about the US growth. So it seems like that growth slowdown story is not over just yet.
Yes, and the curious part about that is that the US market didn't do too well, but Asian markets this morning are actually doing better. And that's because now what is happening is that now even the December rate hike is getting out of the window. You're believing that the rate hike talk will only start in March now. So, while you believe that it's good if the rate hike is out of the way, then at least one uncertainty is out. But at least in the near term, if you believe that you have 6 more months of easy liquidity, then that's where you've started to see emerging markets now showing signs of outperformance compared to even the European markets and the US markets.
All right, well, let's tell you what you'll get to see on the show, and then we'll continue discussing all of these issues. Well, our market master for today is Vineet Bhatnagar of Phillip Capital. He'll track all the market action for us and tell us what we should expect for the rest of the series. Jan Lambrechts of Rabobank will also map all the global cues for us. It's a mixed bag this morning as far as global cues are concerned. Varun Lochav of CIMB Equities will tell us what he's made of HUL's lackluster Q2, and Ravi Shenoy of Motilal Oswal Securities will join in with his top mix.